Set to record. Cool. So now we're recording. First and foremost, thank you guys. If you don't already have a TradingView account, you can find the link to that in the chat box for this webinar. Please create an account and follow along if you'd like. And you can take notes or whatever suits your fancy. So, oh, you can't hear? Uh-oh. Can other people hear? Okay. George just has to be special. Try to leave and rejoin, George. Sometimes that... Oh, he can't hear me, so that's not going to do a lot of good, is it? Yeah, good call. But anyway, we'll go ahead and get started because I do have another meeting, a one-on-one meeting at 7. So first thing I want to note is when you are charting using TradingView or Coinity or whatever you're using to chart, there's always going to be this little box that shows the time frame. Now, there's a common misconception that when you click on a time frame, and the reason that this is a misconception is because Blockfolio and Delta represent the data in a different way or display the data in a different way, so it confuses people. On Blockfolio, when you click 1 hour, the arrangement, the line of candles, each of these little bars is called a candle. The collection of candles represents that hour. And in conventional charting, like TradingView or Coinigy, each one of these candles represents 1 hour when you're on the 1 hour time frame. So that's just one of the more basic things to cover. Each of these candles represents 1 hour. If you go to a day, then now each of these candles represents 1 day. And the reason that you jump from time frame to time frame is because each time frame gives you a different perspective as to what the market is doing. Because you can see on the daily time frame here that we've been in a downtrend for quite some time, and it indicates that we are due for a recovery, right? It indicates that we have now shown a reversal pattern here. We found a floor, and now we are looking to continue back up. But the daily time frame gives you the big picture. It lessens volatility and gives you a clearer big picture of what the market is doing. Now, if you come down to like a, even like a 1 minute time frame, let me reset that scale. Come down to a 1 minute time frame, notice how there's a lot of gaps all over the place between the candles. That's because on a lower time frame like the 1 minute, there is a lot of volatility. And so you don't see the same kind of up and down jerky movement on the daily time frame because there is a lot less volatility. So this is the advantage that there is for using multiple time frames. Typically, the 1 minute time frame is garbage with cryptos. And that is because there's not enough liquidity and the volatility is so high that you get these jumps all over the place. And so it's just wild, it's unpredictable, and it's not good for charting or a reliable means of figuring out where the price is going to go. The lowest that I typically go is the 15 minute, sometimes the 5. And in the 15 minute, you can see that there's much less gaps, if any at all. And each of these bars represents a 1 15-minute period of price action. So that said, you can still see that there's a lot of up and down movement on the 15 minute, and you'll see that as you go up in the time frame, the volatility drastically lessens. You can see here on the monthly that each of these bars represents 1 month, that there's hardly any volatility, right? On the monthly, we're mostly just looking at a single run up and a single retracement. came down and hit the 61.8. But so you get a much cleaner idea of where the market wants to go the higher that you go on the time frame. Typically for charting, I use the 1 hour and the, why is my thing not working? Hold on, sorry. There we go. Typically for charting and for finding entries, etc., I use the 1 hour, the 4 hour, and the daily for cryptos. And that's because I'm more of a long-term big picture trader. I look for the ideal entries to swing at least 100% is typically what I'm looking for. So now we've kind of covered the time frame situation, and that's up here in the corner where you can select the time frame. And remember, it's more important to note the difference between Blockfolio and Delta and the portfolio apps and an actual charting software like or web app like TradingView. Because Blockfolio, the collection of candles represents that time. So if you see this on your Blockfolio app and you have it selected to 1 hour, then this collectively shows you 1 hour of price movement, not each candle. And that trips a lot of people up. So just be aware of that. So for those that don't know what a candle is or what the, I'm actually gonna go over to a Forex pair here so that I can go down to the 1 minute and show you a better example here. And Forex and crypto all work the same way in terms of charting and candles and et cetera. So that's why I've always preached that the best crypto traders know how to trade Forex. And I stand by that. I'm adamant on that I was a Forex trader first, a successful Forex trader, and it made me a much better crypto trader. And it made me a successful crypto trader. But anyway, neither here nor there. Point being that technical analysis plays such a huge role in Forex that learning those skills transfers over to crypto in such a phenomenal, seamless way. But a candle. So each of these bars is a candle. We're on the 1 minute time frame. So each of these candles, I'm going to go to a pair that's more volatile actually. Each of these candles is 1 minute. Now, when you have a green candle, that means that the overall bias of that particular candle, that 1 minute of price action, is bullish, meaning that it's going up. When it's red, that means that the overall bias of that candle is bearish, which means that it's going down. It's decreasing in price. So, oh, you know what? These aren't going to move at all because the market's closed. Damn it. I was like, why is it not moving? The Forex market's closed on the weekend. So back to Forex we go, or back to crypto we go. I was just trying to find something that had a little bit more volatility. But that's fine. Anyway. So back to crypto. But you can see that as this candle moves, the red indicates that it's going down and the green indicates that it's going up. That part is pretty self-explanatory. Now, let me show you an example of what a wick is. So right now, you can see that the red candle here that's going down is at the lowest point that it's been in this 1 minute period. So now it just jumped. Yeah, this is the kind of volatility I'm talking about on a lower time frame with cryptos. It just jumps all over the place. But you can see that this wick right here, this wick represents the area that price has traveled. So now we have a wick that goes from here to here. So that means that although price is not currently at the highest or lowest point that it's been during this 1 minute period, the wick represents the area that it has traveled up and down. And so that gives you an idea of the kind of stability that the price has during that time frame. So when you have a big candle like this that shows a tiny little wick at the bottom and a large bullish green candle with no wick at the top, that indicates a lot of buying pressure, a lot of buying volume, because it shot up and it closed that 1 minute period at the highest point that it was at. Now, when you have a candle that's like this, with a little tiny amount of actual price movement, then that represents that the buyers and the sellers are kind of struggling. And that is indicative of a reversal, typically. So in this case, we had this large five candle move up that was all green. Bullish, 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 bullish. And then we hit this point, and you can see that the candle and the wick and the candle body were both relatively small, which indicates a reversal. That indicates that there's selling pressure that is fighting the buying pressure that there has been. And that's where we saw two red candles. So without having even, I mean, if we were just looking at, so this is a good example right here. We have just in current price action right now, we have this 5 minute period closed with a small green body with large wick from top to bottom, which indicates that there is a struggle between buyers and sellers. And subsequently, we have this large red candle that just opened this new 5 minute period. And just a quick little tip over to the side here, see this number that's counting down, 409, 408, 407. This is a countdown to the close of this time frame, this candle session. And each candle represents 5 minutes. So in this case, we have 3 minutes and 55 seconds until this candle closes. And if I was trading this right now, if I was scalping Bitcoin, I would have anticipated this drop. Now, it's not much, right? We're talking about what looks like $15 on Bitcoin, which is not a lot, but it's a sell-off right now. So yeah, essentially this means that we had this big buying pressure up, and then we had this candle that represented a struggle between buyers and sellers because it met in the middle with a large wick at the top and a large wick at the bottom, and then followed by a large red candle. So this could have been predicted, is what I'm saying. But bottom line, the focus that I want to have right now is that the anatomy of the candles themselves, when it's green, that means that it's bullish. It means that it closed, this period closed higher than it opened. And so on this candle right here, this red one that I'm looking at, it closed at the lowest point of the candle body, not the candle wick. Remember, the wick represents the area that the price traveled during that time period, but the actual body represents where it closed. So the price closed at this point, this 8570.3, and it opened at the exact same point, because typically where a candle closes is where it opens. Now, there is a little bit of wiggle room on that with cryptos because of the lack of liquidity and volatility, and there's increased volatility. But a typical rule of thumb for when you're learning is to consider where one candle closes, the next one opens. And the reason that this candle is red is because it closed lower than where the previous one opened, right? And the reason that this next big one is green is because it closed higher than where it opened. So we have this movement up from where it was down up here to where it closed green because it closed higher than where it opened. Same story here. We had it open here and it closed higher than where it opened. This green one right here is a product of lack of liquidity. That's why it's green. But just the typical rule of thumb, and this is why I prefer to teach this on Forex, where there's a lot of liquidity and there's a lot of good examples. But typical rule of thumb is where one closes, the next one opens. When it's green, that represents that it closed higher than it opened. When it's red, that represents that it closed lower than where it opened. And that's the cliff notes. If you want to write that, if you want something to take away from this, that is it right there. And again, the wicks represent where the price traveled during that period. And I have a really good, what I consider a pretty good candlestick anatomy video that I have on the New Horizon training content. So if you are a New Horizon member and you haven't seen that yet and you want some further clarity, it's like a 45-minute video where I just look at examples and drill that into your head. All right, so that's how you read candles. Are there any questions right off the bat pertaining to candlestick anatomy, what the candle bodies, colors, or wicks represent? Looks like good shape. If there are any questions, please don't hesitate to reach out to me in private. I'm more than happy to help. How do you determine it's a good jump in point? So that's kind of a broad question. How do you determine when it's a good time to jump in is basically the magical question that we as traders are forever trying to answer in a number of ways, whether it be using indicators or price action structure, support and resistance, moving averages, oscillators, Fibonacci, harmonics. There's not to make it sound like it's overwhelming, but there is not really any simple way to answer that question. But what we learn as traders, specializing in technical analysis, is how to use all of those different features in Harmony. What is my criteria to consider it a solid reversal? It really depends on the circumstances. I personally don't consider anything under the 1 hour time frame to be a solid reversal, as it were, because the lower time frames break structure and reverse back and forth so frequently that it's not a good representation, or it's not indicative of a solid reversal by definition. So if I was looking for a solid reversal, I'd be looking on the 1 hour or the 4 hour time frame. And I would be looking for a candle, so there's different candle, single candlestick patterns that represent that there is a reversal coming. So in this case, this is a good example right here. You can see that the wick of this 4 hour candle is really high on the top and really low on the bottom, which indicates to me that the buyers were trying to take control in this area because the price drove up this high, but the sellers, the bears of the market, were pushing it down. So this to me represents an oversold market. And you can see that the RSI actually correlates with that. The RSI of this candle down here is around 12, and anything under 25, by my opinion, the way that I trade, is considered oversold. So the next thing that I look for so this would make me suspecting a potential reversal, but this is not considered a reversal yet. When I consider it a reversal is when you have a bullish or bearish, whichever way we're moving. In this case, a bullish engulfing candle. And engulfing means that the candle following the one that you are suspecting a reversal from is larger than the previous candle. So you can see this green candle engulfs this red candle. So that's considered a bullish engulfing candle. And because we're oversold on RSI, that would indicate to me that, okay, we have three different forms of confluence here. We have an oversold relative strength index. We have a reversal pattern with this single candle, and we have a bullish engulfing that follows. So this would have been a sign of a reversal for me. And as you can see, we ended up moving from the point of the bullish engulfing. We end up moving, we're still going up. We're up 30%. So the rest of these are retracements. Once we have come back up and broken structure, the downward structure that we had, that was broken right here. Now we have broken structure and we're in an uptrend. And each of these little pullbacks is just a retracement level. And I can just tell that by looking at it. But if we want to measure it out, let's look at that. That was a 38.2 retracement from this move. I bet that was a 23. Oh, I'm sorry, 61.8. You know, each of these pullbacks, that one was a 78.6. Each of these pullbacks is just a retracement that's maintaining this uptrend. How can you find what are sell walls? Well, let me go in order here. Do you use any other indicators besides RSI and price action and candles? Yes, I know how to use just about all of the major indicators, and I typically use moving averages. Sometimes I'll use the Ichimoku cloud. It really just depends on my mood and what I'm looking for. How can you find what are sell walls? So in later sessions, I'll have to go over each of the indicators specifically. It's kind of hard to cover all of that in a single beginner's course, but there are a lot of different indicators that I use. How do you find the sell walls? So TradingView, to my knowledge, doesn't have, no, it wouldn't make any sense that they do. They don't have the sell walls here. You have to find the sell walls on the exchange. You need an order book. Yeah, what Billy said. So because this is just charting software, it's not where you're actually facilitating the trades, that you would have to be looking at the exchange in order to find it. Now, let me think of an exchange that has a... Come on. Oh, is that what's screwing it up? Here, I'll go to KuCoin, that's fine. Yeah, or GDAX. There's a lot of different options. But either way, you can see KuCoin has nice sell walls down here as well. And so you have to have an order book to have sell walls. And the way that you read a sell wall is the sell wall simply, the easiest way to understand a buy or sell wall is to just think of it as a visual representation of the order book. That's in its simplest form exactly what it is. That's all it is. It's just a visual representation of the orders that are going on. So you see that in this case, we have a pretty high buy wall compared to the sell. And that just represents that we have more buyers than sellers in the order book, which is accurate. If you come over here and look at it, we have a 2000 KCS order sitting right here on the front of just right here at current market price. And so that's a pretty massive buy wall. And we don't have very many. I mean, the highest sell on this order book right now is 100. So this single buy order can eat through all of these sell orders. And so that is what it means for a buy wall to absorb or just tear down these sell walls and just drive the price up. So if I was looking at this pair right now, I would expect it to go up from this point for numerous reasons, one of which is that. And you can see that as the price fluctuates here, you have this guy wanting to buy 2,000 at 67213, and the current market price is 67215. But you have this guy that's willing to buy it for 67216, a little bit higher than market price, just to get his order in before this guy going for the lower price. So it's kind of a complex system, but just in its simplest form, a buy wall versus a sell wall is just a visual representation of where the traders are attempting to move the market. When you have massive buy wall like this, it's a pretty safe opportunity to enter the market without fear of the price being driven down quickly. And when you have a high sell wall and not a lot of buyers, that is perhaps even more importantly representing that you may want to consider trying to sell your order because the price is going to struggle to break down that sell wall. So you may have found a ceiling in the price if you're trying to day trade, and you may want to get out for the time being. And so these buy and sell walls are really helpful for day traders, in my opinion. If you're just buying to hold it until you hit 100%, it doesn't really matter. So the next thing I think I've got time to cover here. We've kind of talked about candles, time frames. So now we have a general idea of what we're working with as it pertains to, what we're actually looking at here. We're looking at a candlestick chart on the 4-hour time frame, and we know what the red and green candles intrinsically mean. Now, the next big thing that I do when I first start marking up a chart is look for trend lines and horizontal support and resistance lines. So a trend line, what you guys have seen me mark up 1,000 times in live trading sessions and screenshots, a trend line is simply a diagonal area of support and resistance. And support and resistance, to cover it in the most simple form, support is the area that you expect price to fall to before reversing and going back up. And resistance is the area that you expect price to go up to before it turns around and comes back down. So you can think of support as the floor of a building and resistance being the ceiling. You as a human being are walking through your house on the floor, walking on support, but if you strapped a jetpack to your back and launched it off in your living room, you would hit that resistance, aka ceiling, and probably come crashing back down. Now, it's possible that if that jetpack is strong enough that you bust through the ceiling and continue going up. But your expectation is that a ceiling is where you're going to find resistance. You're going to struggle to break through that ceiling. Just like if you were trying to dive headfirst into your floor, you would probably find some support. You're not going to break through your floor by going headfirst into it, probably. So that's the easiest way that I can kind of give you a real-world example of support and resistance. Now, let's say that you strap that jetpack on and you fly through your ceiling, and then you run out of fuel and you fall back down. If you land on what was once your ceiling without falling back through it, then now that's support. So the way that we trade is that support and resistance areas aren't intended always to be respected. But when resistance is broken, it turns into support. And when support is broken, it turns into resistance. So in this case, I'm looking for a horizontal line. You come over here on TradingView, you press the second icon here, and you go down to horizontal line. And let me clear this chart. And we're looking for an area where price has come down, hit, and then reversed on multiple time frame, or in multiple instances. So I'm going down to the hourly just because there's not enough data on the 4 hour, not enough volatility. So here's a good example, right? We have this area right here that, and again, for those that haven't been in my live trading sessions, I always put support as blue and red as resistance. So in this situation, this is an area of support because the price has come down, touched it, and reversed. So after the first 2 times that this happened, right here, after the first 2 times that this happened, I can predict that if price comes back down to this area, it's going to happen again. And that's called trading between support and resistance lines. It's pretty simple, right? We don't currently see, we have only this to go off of. And so we're thinking, okay, well, we're headed up right now, but we come up here and then we saw a reversal. Right here is where we saw a reversal pattern and we started on a downtrend. And now I'm thinking, okay, well, if we do come back down to this area, that would be a good time to buy, right? Because in the past, we have seen this area respected as support. We came down, boom, we bounced it. And then we went back up. So that would have been a really good time to buy in this area of support. And you would have made another 30% on your trade there. This keeps going, keeps going, keeps going, keeps going. Oh, and this time we broke through the support. Let's take a closer look at that. So what you typically look for with support is a lot of volume. And in this case, we had this really big 3-candle move with this massive amount of volume that broke through. If we add in the volume indicator here, you can see that this is just about the highest volume. Now, the volume indicator here at the bottom, just the higher the bars are, the more volume there is. The red represents sell volume, and when it's red, that means that the overall bias of that time period is a sell, and the overall volume of the green ones is a buy. That coincides with the color of the candle. But so we have insane sell volume that broke through this area of support. So that's a pretty clean break of the support zone. So you don't want to set a buy right here as a pending order, but rather you want to watch this area and be ready to buy if it respects it as support and continues upward afterwards. But in this case, it broke through, it retested. Now, a retest is when you have a really strong break through the support, and then the price comes back up and kind of plays with it again. And this movement from breakthrough to back up to the support is what confirms this area now as resistance. So now suddenly, this area that was once support is being treated as a ceiling. It's no longer a floor. It's being treated as a ceiling, and it's going to drive the price further down. Now, where you would enter on this trade, you would watch this zone. Once there's a breakthrough and a retest, now you want the retest, then you short, you sell. With Bitcoin, we're all pretty much just looking for the ideal buying opportunities, right? But in this instance, you just wouldn't buy yet. You would expect price to continue to drop. And that's exactly what it did. It retested this zone as resistance and then continued to fall. What did it do over here? It reversed, it came back up, it tested this zone as resistance again. So you can see that this applies on multiple, this will happen multiple different times. So in this situation, we have an area of resistance, whereas back here, we had an area of support. Blue is support, red is resistance. It's the same horizontal line, it just depends on what side the price is on. If we've broken and retested this zone as resistance, the zone is now resistance until proven otherwise. Right? So we retested as resistance twice, and now what do we have here? Prime example of a breakthrough, right? We have a ton of volume, or a large amount of volume, a very big bullish green candle that busted right through the ceiling, and then it came back down and broke through again, retested as support, or retested as resistance. So this is failed support. That means that it came down, it tried to find support in this zone. That's what that big green candle is. But the bears, the sellers in the market said, nope, we're going back down. Sorry. So we had a failed support on this zone, and it busted back through on the retest and became resistance again. Another perfect example of resistance. We came up here, we tapped the area of resistance before dropping. So this is another example. And you can also see a lot of consolidation along support and resistance zones. So this right here is what we call consolidation. We had a breakthrough. This is a false bull trap breakthrough. It retested, and now it just kind of moved around. So you want to wait for that strong confirmation that there is a break and retest that is supportive. You know, you have 2 or 3 candles moving in your direction before you, or a really strong engulfing candle that indicates that you are respecting that area as support or resistance. Came back down, down, down. This is where we dropped a ton. And now, can anybody tell me if we're at support or resistance? Looking at this current market. Right, it's resistance. Because if we drop a horizontal line at current market price, or around current market price here, you can see that in multiple instances, this price has respected this zone or struggled along this zone. Right here, you can see that the price juggled in and out. And then right here, we saw that it respected as resistance. So these 3 long wicks that we've had the past 4 or 5 hours all represent that the price is struggling in this zone. It's not just continuing upward, it's finding the ceiling, it's finding resistance. And what we're going to look for to indicate a bull move is for this price to break through this resistance like it's doing right now, come up and retest it before continuing upward. Now this retest is when it becomes support. It's currently resistance. If it breaks through this zone and retests with a strong bullish engulfing candle or something to that nature, then now suddenly this area has become support and we're on our way. If we see this come down and respect this as resistance, then we're looking for the next area of support before turning back around. In this situation, we have a couple different areas. We have right here, you can see that this was support in 2 instances. Price struggled, juggled back and forth right here, and then did the same right here. Anytime that you see a lot of consolidation, up and down movement, sideways movement, then that is an area of support and resistance, as well as where price made a reversal. So this is our next area of support to look for. And then beyond that, we would be looking at right around here for the next area before turning around. And the reason for that one is right here we have support, and right here, or right here we have resistance, I'm sorry. And right here we have support. And remember, support and resistance zones are interchangeable depending on which side of price, or which side of the line price action is on. So the reason that this box right here is resistance is because it came up and was treated as a ceiling. Now this same zone is support over here because it came down and treated it as a floor. So really it depends on where price is in relation to that line for it to be treated as support or resistance. Support indicates that it's going to touch it and go up. Resistance indicates that it's going to touch it and go down. Now this is a fundamental part of technical analysis. This is something that it is so easy but so reliable, because what kind of creates this legitimacy and what creates this accuracy of support and resistance areas is the psychology behind them. Enough people believe that these fictitious lines mean something that it's made into existence, if that makes sense. Because that's all charts are. It's a visual representation of what traders like you and me and all of the other millions of people that are trading this currency are doing. And if enough of us believe something will happen, then it becomes reality. So yeah, exactly. So these lines don't really mean anything on their own. This line is just a made up imaginary line that enough people believe matters that it does end up mattering. So the psychology behind trading is so important. But for that reason, enough people know that this area is going to be treated as either support or resistance, that it's going to become one or the other. If we see this candle come up and retest as resistance, I guarantee we see a spike in volume on the buy order book, because there's enough people out there that are going to see that as an opportune buying entry. So that's kind of the psychology behind support and resistance. Now, trend lines are the similar side of this, just in a horizontal or in a diagonal fashion instead of a horizontal one. So when you have a trend line, you have a similar situation going on, but you have this bottom trend line is still resistance. We're still calling that resistance. It's just diagonal. Does that make sense? You see that the candles came down and touched this area and then went up, just like they would for a horizontal. I'm sorry. This is support. Crap. I hope I didn't confuse anyone there. My brain's a little mashed up. So price is above this line. So this is being treated as support. And when it broke through and retested that line, now it's become resistance. So for our alt, we want BTC to be high. Not sure if I understand the question. Are you asking how the value of BTC influences the value of the altcoins? So there's a correlation between them, because in your Bitcoin pair, it's Bitcoin to dollar. Now, every currency, well, just about every currency has a pair. Certainly every cryptocurrency has a pair. So the valuation of this data is a comparison between Bitcoin to the dollar. Now, if you go to like an altcoin, like Salt Bitcoin, the base currency here is Bitcoin. So because the base currency is Bitcoin, the value is in Satoshi, not in dollar. So let's say that the dollar amount of whatever this is right now. Now, that's one thing that you got to get used to is kind of looking at everything in its Satoshi value, not in the dollar value as it pertains to trading. Now, you could come in here and some of them have USD bases. I think Ubiq might be one of them. Yeah, calculated by TradingView. So I wouldn't consider it the most reliable, but we'll use this as an example. The price of Ubiq to US dollar is $2.9. And that's the price that you see on Blockfolio or Delta. But this isn't the chart that most people are trading. Now, it doesn't mean necessarily that there aren't people that are looking at this, but the importance of the technical analysis, in my opinion, is lessened because this chart isn't on the exchange. It's not on Bittrex. It's not on Coinigy. So when people are actually trading this currency, they're going to be looking at the Bitcoin base, the Bitcoin pair for their technical analysis, typically. Now, again, it doesn't mean that technicals don't apply to a US dollar base, but the reason that I typically do my charting in the Bitcoin pair and post my charts in the Bitcoin pair is because I want you guys to get in the habit of using that relationship to your advantage. It doesn't have to be a bad thing. Now, we're at $2.9 on Ubiq, so let me kind of bring my point home. On Ubiq here, we are at 33600 Satoshi right now. And when you have a Bitcoin base, that means that if the price of Bitcoin increased, let's say the price of Bitcoin doubled, the Satoshi value right this second at 2.9 US dollars would double if Bitcoin doubled, because the 33600 Satoshi of Bitcoin is contingent on Bitcoin being 8,700 or whatever it's at right now. If Bitcoin suddenly became 16,000, then in order for 33600 to hold the same value, it would have to double. So that's why sometimes you can actually gain Satoshi value. So let's say that the US dollar price of you, now this would never happen. This is just for an example, because if Bitcoin rises, then all kinds of other factors come into play. And then now the US dollar value rises because people are dumping more into it. But let's say that for the sake of this example, the US dollar value of Ubiq stayed the exact same. It's at 2.9 US dollar. But the price of Bitcoin doubles. So Ubiq is still 2.9. Bitcoin is now 18,000 instead of 9,000. This chart is still going to go way up, all the way to 6,600 or so, without the US dollar value of Ubiq actually changing at all. So you don't actually make money, you just gain Satoshi. And the way that you would make money in that situation is that you can now sell the same number of shares for less Bitcoin, essentially. Or no, I'm sorry. I did this backwards, I think, because my brain is actual scrambled eggs right now. If Bitcoin goes up, oh God, I'm sorry, guys. If Bitcoin goes up, this would cut in half, not double. If Bitcoin dropped in price by half, then it would double. So if Bitcoin went, I'm sorry. I just got off of a 5-hour Chartist meeting, so my brain is scrambled at the moment. But so forget everything that I just said. I'm so sorry. If the US dollar value of 2.9 US dollars stayed the exact same and Bitcoin doubled in price, that would mean that the Satoshi value would cut in half, because now you're actually trading the same US dollar value. If you have $100, 100 US dollars worth of UBIC, in order to get 100 US dollars back, if you were to sell it at the same exact US dollar value, then you would have to receive less Bitcoin in order for it to equal the same amount. So you can actually lose Satoshi value when the price of Bitcoin fluctuates. Now, where it gets complicated is when the US dollar value is also changing. So now you have two variables that are both volatile. And the reason that the Bitcoin to US dollar pair or altcoin to US dollar pair provides a little bit more stability is because the base pair is less volatile. So that's why a lot of people are calling for the standard base pair to become Ethereum or Ripple or something that is a little bit less volatile than Bitcoin is. Because Bitcoin's volatility is what is creating a lot of volatility in the altcoins, if that makes sense. All right, guys. Well, I'm going to have to call for any last questions. I'll talk more about diagonal areas of support and resistance next time, just because I've got a one-on-one session that I've got to start. But hopefully this has been helpful for those of you that are still kind of breaking into the technical analysis world. I'm sorry about the couple instances of me getting my thoughts backwards. It's been one heck of a day. Thanks, Joe. Thanks, George. Happy to help, guys. That's what I'm here for. I appreciate your support, as always, and just don't let it happen again. And I will see you guys next time. I'm planning on the next live trading session being Monday at 6 p.m., but I'll post in the channel when I confirm when that's going to be. I think we'll probably do 6 p.m. on Monday, though. And then just a reminder that as of Sunday, 12 a.m. Eastern Standard Time, the first 5 people, and I'm not gonna post a reminder this time because in order to encourage fair distribution of people that want the opportunity, as of 12 a.m. Eastern Standard, the first 5 people that contact me for a one-on-one session for next week will be put on the list. Ripple giveaway also. All you have to do is be an active member of my service and you are entered for the chance to win 1,000 Ripple. That drawing will be on March 1st. And please, please, please go to my page and share the post so that I can get some exposure and hopefully build our community up a little bit. All right, guys. Thank you very much. I will see you on the next one.